Hello, everyone. A little bit lonely in here, but that's okay. Welcome, everyone, to the Week in Review. Slight change of pace this week. I normally say what a week it's been, but it's actually been, with the exception of a couple of high-profile stories, a relatively quiet week. I would say. I think some of the guys would agree with me, but we'll get more into that. That's not to say there weren't some important developments this week, notably at least one high-profile bankruptcy. But there was also some interesting developments in the Layer 2 space that I think we're going to unpack a little bit here, as well as, of course, the more morose news concerning the CPI numbers from this week. So why don't we go ahead and kick it off with the big news of the week. Celsius. We have talked about, they've come up multiple times, but this week they've filed for Chapter 11, and this is obviously pretty significant news. I want to just open this up to the group. I don't know who has some hot takes on this issue, but what do you guys make of this? Did you see it coming? Does it surprise you at all? Tim, I always pick on you first, so I'll pick on you again.
Yeah, well, I think a lot of people saw this coming. The past 2 weeks have just been, endless sort of allegations of various kinds, and people defaulting, and I can't say I'm really surprised, but that doesn't make it any less of a sad moment, I guess, in the space. Christian covered this. It came out late Wednesday evening in UK time, and this is something we've noticed a lot of these companies do, is they try and put out their announcements of bankruptcies or halting coin withdrawals or whatever it might be at some really awkward times to try and hide it. So we didn't cover until the next day, but we try to take a bit of a different approach and look at the sort of more human aspect of it. The people who are on Reddit and Twitter and saying, I've lost this much money. I'm in this kind of situation, and it's just awful. I guess it did spark a bit of an emotional reaction from me as well, because if you look at the comments from Mashinsky, it's Mashinsky, the Celsius CEO, he's there in press releases saying it's the right decision, and saying that in 2 years' time we'll look back on this as like a pivotal point of where we succeeded above others. And it just seems he's completely out of touch and, verging on, may I dare to say, like psychopathic or something like that. To be saying something like that, completely unaware that your irresponsible and reckless actions have kind of ruined a lot of people's lives. So, I guess that's my take on it. I'll let others weigh in as well.
Yeah, irresponsible or reckless behavior. I mean, typically, I'd like to pose this question to the group. It used to be the case, at least when I was getting into the space, that, the mantra, not your keys, not your crypto, was it was a pretty hard and fast line of expressing very little pity towards people who ended up in similar situations as those folks who find themselves having lost everything as a result of entrusting it to companies like Celsius or Voyager, etc. Do you guys think there's a little more pity in the space now? Like, it seems to me, like, at least just from monitoring the Twitter feeds and the Discords and whatever, that people seem to be angry at the companies. Like, I seem to hear a lot less of, oh, you should have known, not your keys, not your crypto. But the ire seems more directed at, these companies seem to have misrepresented themselves. Is that a fair take, or what do you guys think of that? Tom?
I kind of think that, not your keys, not your coins, made a lot. I mean, it still makes a lot of sense, but like it came about like after Mt. Gox, and back then it's not that people didn't suffer like huge losses. It's just that the composition of a crypto market, like the kind of participants that you had in crypto was quite different from now. Like it was people who like who are really interested in, I don't know if interested in tech, but like what I'm trying to say is that like as adoption grows, it's kind of normal for demographics to change. Now you've got like amongst those posts saying that people are suicidal and stuff like that. Like among those posts was people saying I'm a single mother, or like I just lost like 20 years worth of savings and stuff like that. Whereas maybe back in crypto's early days, participants were a little bit more like, I don't know, like young, you know, cyberpunks, or like a little bit, or like, you know, they got into crypto because of drugs, or you know, like they got to crypto through like Silk Road or something like that. Like I think the fact that like we're probably in like this transitory like phase where adoption, you've got more and more like ordinary people using crypto, but regulations are still not there to protect them as well. So I don't know. I obviously feel bad for people who lost money in Celsius, and I think that it's a different kind of rug from you lost all your savings trying to farm a Ponzi, like I don't know, like one of those like crazy Ponzi's you see, like Wonderland, or like on I don't know. There's a difference there for me.
Thanks, Tom. Yeah, it seems like there is a kind of material difference, at least in the case of Celsius, which was careful, at least to my knowledge, careful never to represent itself as a bank, but seemed pretty comfortable representing itself as, in many ways, better than a bank, or at least safer than a bank, more trustworthy than a bank. And that clearly turns out not to have been the case. Any other musings on this topic? It's also worth noting. Navesh, go ahead.
Yeah, I was just saying that I was just looking at the number of Ethereum addresses and the number of people who use DeFi. So there is this report from Consensus from January 2022, which says around 4.3 million unique addresses engaged with DeFi products, and there are more than 170 million Ethereum addresses. No, 200 million Ethereum addresses. So we can see that this percentage is quite small, and even crypto natives are not using DeFi. So like my point is that people won't stop using centralized exchanges or these platforms which provides them easy access, and even if they do, it's a long way out, and in the next like a bull market, we can have another issue. And yeah, as like Tom said, it started with Mt. Gox, not your keys, not your coins, but there's still a very long way to go before people realize it and actually start implementing it in their lives.
Yeah, I think that's a good point. I know I've said this in this discussion before, but one of the reasons people use banks is because it's a place to keep their money safe. And if you can't feel confident that your money is safe within an institution, its long-term prospects or long-term usefulness to you is dubious at best. One other thing I was going to mention, just because it bears is worth mentioning. Speaking of high-profile bankruptcies, our old friends 3AC, 3 Hours Capital, were the subject of an emergency bankruptcy hearing in, I believe, Southern District of New York Bankruptcy Court, and had all of their assets in the U.S. frozen as a result of this proceedings. That seems to have happened relatively quickly. Did anybody have any hot takes on 3AC's sudden development? Any surprise with it? I was a little surprised by the speed. Sorry, Tim.
Oh, let's go. It's fine. Yeah, I guess it's kind of surprising. I think that the 3AC situation has become way more convoluted than a lot of the other sort of bankruptcy / insolvencies from where I'm sitting. Yes. Yeah, probably because a lot of their dealings are in sort of the DeFi world, and of course they have a huge amount of NFTs and sort of you call them auxiliary funds. I'm thinking like Starry Night Capital, which owns the NFTs, and then there's Defiance Capital as well, run by OX Arthur. And yeah, I think that we're the worst is yet to come in this situation. I think that there's been some other people on Twitter saying that the NFTs from Starry Night Capital and other ones that 3AC own will be liquidated. It's just a matter of time, and yeah, I guess it's just a really complicated situation. But I think on the plus side, there probably isn't much contagion left for like stuff like Bitcoin and Ethereum. It seems like now that things have gone into like court proceedings, I think it was actually Nathan who mentioned this maybe in one of his trading emails about how that's sort of provided some relief for the market in the short term. And I know that 3AC I think that they have a lot of Grayscale Bitcoin Trust shares on their balance sheets or something along those lines, and that there could be potential for that to push the market further down. But I think I'd probably have to look into it more. Has anyone else got any more information to share on that? That's what I want to know.
Not information, but I'm just speculating on where the heck Sue and Kyle have disappeared to. Like, I'm just trying to understand why. Unless, I mean, I don't want to make the presumption that they did anything criminal, but it seems unusual that they would escape even if they were going through bankruptcy, if there wasn't something very wrong.
Yeah, it's not a terrific look, and it certainly doesn't speak well to or speak to anything good going on behind the scenes. I want to hone in a little bit on something Tim said about about the idea that once things make it to court, it kind of calms the market a little bit. And Nathan, if that's true that you wrote about that, I'd be curious to hear why you think that is. Is there something to the idea that once these things make it to court, there's a calming effect on investors?
Could you repeat the question, please?
Oh, sure. So Tim mentioned something in his bit earlier that something about these proceedings making it to court in the case of in this case, 3O's Capital emergency bankruptcy proceedings. There seems to be like a calming effect on the market when, or presumably it might be a calming effect on the market when these things do end up before a judge. Is there anything to that thesis, or is that just pure speculation on our part?
Yeah, I wrote about that yesterday, actually. I think it's possible. I think there's some other factors as well that are pushing the market higher. I think we had a Fed speaker come out and suggest that 100 basis point rate hike is off the table, and that's too aggressive, and it's more likely going to be a 75 basis point hike. And I think that was the main thing that pushed the market higher. But I did also see a lot of stuff on social media about that, with Celsius calming the market somewhat, and also the Ethereum merge. So I think maybe 25% of the move can be attributed to that.
Okay. So not overwhelming, but not insignificant either.
Yeah.
Cool. I think it makes sense. There's a kind of finality associated with. I mean, not finality. Obviously, this is in bankruptcy proceeding goes on. Can go on for years, but it does seem to provide a sense of, okay, at least now we know what's going on. At least in my mind, like there's no more, in the case of Celsius, there's no more wondering, will they or won't they? Like, okay, yes, they are
I mean, there was a lot of speculation of whether they were bankrupt or not, or how large the gap in their balance sheet was, and this gives a definitive answer to, oh, they're actually kind of screwed.
Yeah, they're out. Like, it's going to be very difficult for them to come back from this. Any last thoughts on bankruptcies, insolvencies, general CFI mismanagement, I guess?
Is this the end of the major bankruptcies? That's my question to everybody. Or do we think that by the end of the year, we'll see another $1 billion+ crypto company go under? Or fund?
The bear market's now over till FTX is liquidated.
Oh, damn.
Just joking.
Bold statement.
I was going to say, that sounds worse than Tether collapsing.
That would be bad. I'm going to keep my eye on Coinbase. I think they're probably fine. But they did include that opaque language about bankruptcies in their customer documents a few months ago. So at least somebody there is thinking about it.
I'm glad you said that because they're also on my radar as well. I don't think that they'll go bankrupt. They won't go bankrupt in the same way as Celsius. I don't think that they haven't done anything irresponsible, but like kind of starting to question their business model after so many they had the NFT marketplace launch, which just was a total failure. They've got a bad rap with a lot of investors because of the high fees and because of listing irrelevant tokens, and then they've had to cut their workforce. So I'm not bullish on Coinbase.
I mean, how does an exchange go bankrupt unless they have a major hack? There has to be some serious mismanagement, Bittrex style, for that to happen. And I mean, not even Bittrex has gone bankrupt; they've just kind of fallen out of irrelevance.
Right. That's why I don't think they're going bankrupt in like that. But I feel like they'll just slowly sort of die off, from where, unless they pull things around or pull something out of their sleeve that's going to turn it around for them. And the longer the bear market lasts, the harder it's going to get for them, I feel.
Yeah. All right.
So Tim, you have suspicions less that they're in a financially poor position, more that they peaked.
Well, I mean, like most exchanges, it's retail sort of trading that they make a lot of their money from, and bear market, there's less of that to go around. And I think that the other exchanges, especially Binance, over the last couple of months are doing a lot better in terms of attracting and maintaining the smaller amount of retail traders out there that there are. And I just wonder, is Coinbase really going to be able to compete if the bear market drags on for maybe a year and a half?
There's a lot to unpack there. I'll reserve judgment for another day on Coinbase, I suppose, although I guess I didn't give anything to indicate that I'm super positive about their outlook. But moving on, let's talk a little bit about Layer 2s. There were some interesting developments in the Layer 2 space this week, notably... well, Tim, I'm going to turn this over to you. We're going to talk about Starkware a little bit, and I want to mention, I think there's been some contention over whether or not we've referred to them as a Layer 2, but Polygon had some big news this week as well, the Ethereum scaling solution. But let's start with Starkware. Tim, we got a PR from them about, 45 minutes before?
Yep.
It was supposed to go.
I'll try and keep it brief. That there is a hell of a lot to unpack here. So if this interests you, I seriously, 3 blog posts, 3 sort of full-length blog posts on the Starkware Medium explaining all of the ins and outs of the Starknet token, which is what they announced. So their hand was kind of forced. Earlier in the week, Suzu of 3 Hours Capital posted a couple of emails to his Twitter. It was the first update he posted in weeks. And one of them referenced this Starknet token acquisition deal basically because they had invested in Starkware in a previous round, they had the, I guess you call it like the option to purchase some of these Starknet tokens. And apparently that got taken by liquidators. The liquidators had to have executed it by, I think, July 6th. They didn't. So therefore 3AC missed out on getting a bunch of the Starknet tokens. And that was a point of contention. Anyhow, yeah, he posted about that. So then you're thinking, well, they've directly referenced the token, and we kind of knew it was happening. So then Starkware officially published something about this on Wednesday. And yeah, the bare bones of it are, yeah, it's going to be a governance token, but it's also going to be used to pay gas fees on Starknet, the layer 2. It's going to be distributed, I think, if I can remember correctly, 17% is going to sort of early investors and contributors. So that's like employees and advisors. Then you've got another 32%. Where's the 32% going? I've got it up so I can check. I think we got 32% going somewhere else, and then 50% is going to sort of like public distribution. It's going to the Starkware Foundation, which is like a non-profit kind of designed to help steward the Starkware or Starknet ecosystem, basically centralizing things and making sure that even if Starkware goes under or something happens, the Starknet, the layer 2, will be its own standalone public good network that will be able to continue under the stewardship of like the community. That's the basic idea. So 17% has gone to investors, 32 to core contributors. So that's like employees and consultants. And then, the remaining 50%, like I said, Starkware Foundation. They've been very clear to say that you can't game the system like, previous airdrops. People tried to do certain transactions or use certain protocols in order to get an allocation of tokens. So I'm kind of speculating on it. I imagine that you will be able to do the same for this. It doesn't matter if they say that you can't. I don't know of any way to organize an airdrop like what they're planning without making it at least partially gameable in some way. But I guess a positive note of how they're distributing the tokens is they said that they have a way to monitor the smart contracts and decentralized applications that are built on Starknet. And then they can automatically, I think through a smart contract, give out or distribute these Starknet tokens based on how much value the smart contracts and apps built on Starknet are providing to the network. So if you make an app that gets a lot of use, then a lot of the tokens will go to you. That's, I guess, kind of the idea there. Yeah, I'll stop there because there's a lot to go on.
There's two things. Can I add, Jacob?
Of course.
Yeah, so the first thing I'll mention is something to note with a lot of these equity deals in crypto companies is most of them do indeed have a clause that if a company were to ever release a token, that they would get some percentage of it based on whatever equity that they purchased in the company. So I wasn't aware until Starkware released its state blog post today that they would actually launch a token, because there's plenty of agreements with exercise clauses for companies that don't have tokens yet that may never release tokens at all, as kind of the boilerplate for VC equity investment in crypto companies. So that was still a bit up in the air for me, at least. And the second thing I'll mention is, even though you can't game the Starkware token drop, well, they claim that you can't game it. They can do things like backdating it sufficiently. So, for example, for what was it? It was the Ampleforth airdrop. They weighted it based on the age of the transactions that took place. So transactions that took place like a year ago, before anyone suspected them of releasing a governance token, were weighted more highly, and that's where the bulk of tokens went to. So for people that are starting to try to game it now, it may be a little bit too late, or at least their efforts are going to be probably less impactful than had they started 6 months or a year ago.
That's a good point. I can provide a little context on that. So up until about a month ago, unless you were a developer, there wasn't really any way for you to do anything with Starknet Alpha, is what it's called. The first thing that sort of the average user or end user could really do was start experimenting and using their like Starkgate. It's a bridge that goes from Ethereum to Starknet, and so that's like the only thing you could really have done to try and game it. And I know that a lot of people were trying to game it because I think it was Nivesh who mentioned it in a newsletter a few months back. And you go to that, and they have a limit of about 150 Ethereum that they had set. And once that was hit, that you couldn't bridge more funds across. And I wasn't able to bridge funds, and so I haven't been able to use it. But I know a lot of people were trying to, with the expectation that they might get tokens in the future if they did.
Yeah, I would like to. Yeah. So about those wallets or those accounts which were linked with the Stargate. So a week back, the team discontinued those wallets, and they asked like us, the holders, to move move our assets to a different account, so that because these wallets are getting deprecated. So the thing is, I think because they were rushed, they could not manage. They could not. I think they made some changes to how they were going to do airdrop these tokens, because I think I wrote the email around a month back, and it was right after the Starkgate bridge was launched. So that was the first step that where the Starknet Alpha team had taken. So it starts with a bridge, and then you have a couple of dexes, and then you have lending protocols, and maybe a few NFT projects that you can interact with, or it might be an existing project, or it might be a new one. But yeah, so that's how the ecosystem builds. But in Starknet's case, or like the company's case, because like Sue made them rush this, I think they could not go along with their plans as before.
I'm curious because you guys, I know you've spoken to this already, but I've got one more thing I want to ask both Tim and Nivesh, because I know you guys have followed this project for a while. Given the context of the week's news, well, not necessarily the context of the week's news, but just the overall sensitive development of Starkware and Starknet. How do you guys feel about the project's overall potential? Do you think it has legs? I mean, I know we've been following it for a while, but it's still such an early stage project. So I'd be curious to just get your gut feeling on what you make of it.
Yeah, I spoke with Eli and Ben, or Ellie and Ben, the CEO and the co-founder of Starkware, in an interview at the start of the year, and yeah, really, really bullish on the project. I think that it has massive potential. I think they're doing a lot of things right. They're really committed to decentralization and, not rushing things in order to make sure that their project everything that they launch is good and correct. The one thing, though, that I will say is that in the fact that they're giving 17%, in fact, it's more than 17% of the Starknet token to investors and another 32 to core contributors. It's half the tokens are going to like insiders, which is a little worrying. I mean, a lot of criticism has been leveled against other projects. I guess Solana is one of the most notable ones for having a lot of its tokens held by insiders. That didn't stop Solana from blowing up last year, but I think it remains to be seen whether or not it will affect their growth going forward and how much investors will trust in the company.
Thanks, Tim. Nivesh, did you want to add anything to that? Your personal take?
Yep. So basically, like the general information that we have in this industry is that ZK rollups are better than optimistic rollups, and right now we only have optimistic rollups being successful because it's easier to build applications, and ZK rollups, which Starknet is built on, is not yet ready to take on the smart contracts yet. So, and even Vitalik has said that ZK rollups is going to be the future. So definitely something to look at, and carries a lot of potential. A lot of people are looking at it. So yeah, I think that there is a chance that since they could not incentivize new users with an airdrop, uh, that there might be other programs which might resemble liquidity mining of Starknet's token, but then again, they need to develop an ecosystem. And if they had enough time, they would have 6 months, let's say, to have like new projects launched on the platform, and people use it in the anticipation of an airdrop or something. And right now, since they don't have that, there will be incentives there might be incentives to engage with the ecosystem. So yeah, it's definitely something you can profit from as well, and it carries a good, I would say, hope for the long term. So promising a lot.
I want to just follow up on one thing you said, Navesh, because we kind of moved past it, and I think it's important. You commented on the idea that in the industry, or industry insiders tend to believe that ZK rollups are the future, despite their technical difficulties over optimistic rollups. Could you just expound just a little bit on why that is, and why that gives something like Starkware an edge?
Well, I'm not like completely entirely well versed with it, but as far as I understand, it's like optimistic rollups is something where you assume that everyone is doing the right thing, and you only have like a transaction being stopped or going back once there is a false proof submitted by someone else. So that is one of the reasons why we have delayed withdrawals from these like from these layer twos, because I think with Arbitrum you still need a week if you are like withdrawing from their native bridge. There are other solutions, but I'm talking about the core design of it. And ZK rollups, they check every transaction. So their assumption is that everyone is malicious, and so they check every transaction, and it's maybe it provides for faster settlement. So yeah, I'm and to go. I'm not sure, to be honest, like what other benefits does ZK rollups provide, but uh, it has been mentioned by like a lot of people. So as I said, Vitalik Buterin has said it, and uh, Pauline Alla, a Twitter personality who I've been following, they have expanded on these situations where you won't be able to scale a network faster, because you wouldn't have the ability to check back transactions historically. So it's like once it has happened, you have to report the transaction, and then it gets reversed. So there are more details that I'm not aware of, but yeah, it certainly seems that ZK rollups, where every transaction is giving you one proof, like it's proof right, proven right there and there. So yeah, that's
Thanks,
all I
Navesh.
have, honestly.
No, that's plenty. I think that that provides a really key uh, fundamental distinction that's worth understanding, and it makes intuitive sense to me that I guess blockchain aficionados, for lack of a better, broader term, would tend to favor a system, even if it is more technically difficult to build, that does not inherently trust every actor. Um, for, I guess, every obvious reason you can conceive of. I'd like to broaden this conversation up just a little bit to talk about layer twos more generally. There's another story to talk about here, but I want to give Tom a chance to speak. And sorry to put you on the spot here, Tom, but did I understand correctly in the writing room that you had some things to say about layer twos, or did I misunderstand that?
Nothing specific. I think it's pretty interesting to see just how much excitement is like just how excited people are for ZK rollups versus optimistic rollups. It kind of my sentiment is just like people use optimistic rollups for cheap fees, but it's kind of like reluctantly. Whereas ZK rollups, there's cool tech that's associated with it. There's privacy tech, from what I understand, anyways, because I haven't looked like deeply into it. But it does sound like a lot of the privacy concerns that people have in general with public ledgers, with blockchains like Ethereum and Bitcoin and everything. It sounds like the ZK technology, kind of solves a lot of this stuff. And I know that, but like I haven't actually looked into Starknet itself to see if like all the transactions are like anonymous, for example, or something like that. I don't want to say something. I don't want to say something wrong. Yeah, I find it. I just find it interesting what's going on.
Cool. Awesome. I appreciate that. In the interest of honing in the conversation on something more specific, and this may or may not be appropriate to this discussion, because I know there has been some internal contention about whether or not we consider Polygon to be a true layer 2, or if it's just a kind of Ethereum scaling solution. But that aside, Polygon had some pretty big news this week. So you guys might have heard, I'm sure most of you did, that Polygon was among a handful of companies. I want to say it was like 6 to 8. I'm not sure. I'd have to revisit the story. But just a handful of companies that were chosen for a Disney accelerator program. And this struck me as a big deal, primarily because of Disney's role in the IP world. When it comes to intellectual property, Disney has just the most powerhouse attorneys in the world. And if they're getting into blockchain and they're getting into crypto and NFTs, then I have to imagine that the Disney institution is going to have some kind of sway over how that space ends up looking in the long run. What do you guys think? Am I overthinking what this could mean for not just layer 2s? Like I'm presuming Disney money would. Well, I don't know if there's any talk of money flowing from Disney into the project just yet, or at least not how much. But I don't know. What do you think of Disney's getting in on this game, Ant?
So it really interests me. There's 6 companies that are involved. When you look, well, first of all, if you look at Disney accelerator programs from previous years, there's normally many more than 6 companies involved. And it's kind of like this summer camp thing that's kind of tech focused. And to be honest with you, I don't really know what the outcome has been in previous years of these range of companies that are kind of almost recruited to come and take part in this summer camp. But what's really striking, excuse me, about this year's companies is that there's a lower number of them, and that each of them would appear to have very specific reasons to have been selected for like the role that they could potentially play within Disney kind of metaverse type products. So Polygon would seem to be there as the backbone of it, the blockchain provider, but you've got a company that is involved with e-commerce and creating virtual stores. You've got another company that creates AI-driven characters for immersive experiences. You've got another company as well that enables users to discover NFTs tied to real-world locations that they can experience and share via augmented reality. And then there's even a company there that's developed headset technology for AR as well. So this looks to me a lot like there's going to be some grand tie-up between the various strands of Disney's businesses. And if you think about when it comes down to their IP stuff, they've got obviously their actual kind of like animated productions. They've got their films as well because they brought up Star Wars. And then you've got the other side of the business, which is the merchandising, and then you've got obviously the theme parks as well. So the whole idea of like a metaverse, you can almost, in a way, you can almost trace it back, the origins of this kind of way of thinking back to Disney and the first Disneyland parks. Their understanding that people wanted some kind of lived experience to have from the products. If you go back as far as like, sort of Snow White and look at the marketing of that, the way that obviously it was sold to cinemas as the kind of like the film experience, but also all the ancillary products that came out, the houseware items like glasses with pictures of dwarves on them, or whatever it may have been, the children's toys, costumes, all sorts of things that they've made over the years for all their films, that they've always had this awareness that people want a lived experience beyond the films. And so you go from merchandising to the building of these theme parks. And of course, these, they're globally famous, and look at the amount of money that people will pay to go to Disney World, whether it's, I think there's one in Tokyo, isn't there? We've got Disneyland Paris, and I think there's a couple in the States too. And now they've just built their Star Wars park as well, haven't they? Which I can't remember. Is it Galaxy's Edge? I think it's called. Which looks absolutely amazing. Yeah, and when you think about, you've got these physical theme parks, what are they really? They're virtual worlds that you go to experience Disney World. Yeah, it's called Disney World. It is, these are kind of like the original metaverses. They're different physical worlds that exist within our wider physical world. And let's now start imagining those physical theme parks having various augmented reality experiences laid on top of those. The e-commerce, the sales of merchandise. Yeah, like instead of selling colouring books or cups with pictures of dwarves on them or whatever, which have a real world physical cost to produce in terms of plastic and whatever materials are needed, manufacturing processes, labour, blah blah blah, transportation. Let me sell you an NFT at zero cost to me, or effectively near enough zero cost. Like less than 1% of the cost of manufacturing this cup. I'll sell you that instead. This is yours forever. No one can take it away. So that as a revenue model is really, really interesting. You're kind of like captive audience at a theme park, aren't you? And then in addition to that, you've got Polygon coming into it, perhaps, who knows, with someone like the Sandbox or Decentraland, I don't know, someone like that, getting involved with an actual metaverse as well, which, as far as we understand, from when I attended the Proof of People exhibition at Fabric in London last week, I had a really, really good talk there from a guy who's been in marketing and music and so on for years. And he's sort of talking about how metaverse will be used to drive off-chain sales, to build brand loyalty and recognition and awareness, that sort of thing for the youth culture. So this move from Disney, this accelerator program with these kind of 6 very carefully chosen companies, it looks like a big move into crypto for Disney. They clearly see it as a huge revenue driver. And why have Disney got these amazing lawyers? Because there's so much revenue there and it needs to be protected. So I think you're bang on the money saying the IP rights, how that all kind of works out and plays out through the world of crypto, and the idea that Disney's lawyers will come to shape that. Yeah, like you could be really bang on the money with that. I really think so. It's really, really good news for Polygon and the wider space, because it will. If you think about Disney's audiences, they span people from all ages now, actually, don't they? Right from children to mums to grandmas, and all that sort of stuff. So it's everyone. It's a big thing.
Yeah, certainly not financial advice, but this is amazing news for Polygon. Just amazing. Tom, did I see you unmute yourself a little while ago, or did I imagine that?
Yeah, I was about to say that I was skeptical because because we've never seen like up till now, unless I'm wrong, I've never seen someone from the real world actually do something like someone prominent or some entity that's prominent in the real world make something really good in crypto. But then Anthony just completely convinced me, and I'm ready to buy Disney stock again. So
consider yourself red pilled.
Disney pilled.
Hey, what do you guys think? Disney Metaverse, like this? So there's different ways this could go, right? Like augmented reality within the parks. That seems like something that somebody is obviously thinking about. But my immediate thought is that they're gaming for a market involving like virtual visits to the park. Metro, you're unmuted.
I'm more bullish on a Disney Metaverse than a Facebook Metaverse. That's for sure.
No kidding, right? Like in terms of user experience and creating that. Well, yeah, the lived experience that Ant was talking about. Disney have demonstrated themselves to be masters of making that real. So I'm pretty like there's love them or hate them, and there's a lot to be suspicious of in Disney's Magic Kingdom, but they know how to make
real chance to pull it off. Yeah, exactly, and they know how to monetize it. So there's a reason that Disney's lawyers are the most vicious in the industry is because intellectual property laws intellectual property is not worth anything unless you protect it. Oftentimes, so Disney's ability to be able to capitalize on whatever metaverse they're able to build is both concerning from a cypherpunk standpoint, but also makes me optimistic that there will be quote unquote mainstream adoption if they set about trying to build some sort of metaverse.
Just building off what sorry, I was just going to interrupt because Mitchell's just sparked an idea there. The metaverse already exists. The Star Wars Galaxy's Edge was built using some sort of like computer-aided design construction software, and the entire place was modelled down to every piece of plumbing, electric wiring, screw, and God knows what for the purposes of the construction, the artwork, and all the rest of it. It arguably, and I'm just kind of like speculating here, but if they can transfer the existing 3D models that they have from their whatever software it is they're using onto blockchain in some way, or connect that to the blockchain, it literally already exists. So it's pretty mind-blowing stuff. I think it was one of the first big projects anyway that was kind of done that way.
Taken a lot of expense to make sure that Star Wars experience is as authentic a real world Star Wars experience as they can be. So once they start implementing, I guess there's probably, I assume, some AR components of this experience already. Perhaps I have no idea. But a virtual reality experience. I'm not gonna lie, seems pretty cool. Any last thoughts on the Disney Metaverse Layer 2s? Yeah, Tim.
I think Ant has absolutely nailed the comparison between like theme parks and metaverses. So I don't really have anything else to say on that side of it. But I would like to talk a bit about Polygon. Like they've just been absolutely killing it these last few months. I remember, they dipped the price of Matic, dipped down to like around 30 cents. When it was the big capitulation event last month. But it's more than doubled in price since then. You had the announcement that Polygon was going carbon neutral, which kind of kicked things off. It kind of surprised me how much buying pressure was coming through there. And then more recently, on the back of the Disney announcement, this has gone further. I wouldn't be sleeping on it. Obviously not financial advice, but it's surprised me at how well they have managed to sort of take, they were the first sort of like scaling solution. When Ethereum gas fees were huge during the bull run, they came out and they took a lot of the mind share away and built DeFi there. But now they've pivoted that and they've taken it places and they're doing really well. And I would also like to drop just a little hint. I can't say too much about it, but I'd keep an eye out for some more Polygon updates over the next week at ETH.CC in Paris. There's something big on the cards there as well.
Ooh, interesting. All right, we'll keep an eye out for that. Cool. Fascinating points all around. Any last thoughts on these subjects before we move on to the market roundup?
Yeah, I would just like to add on Tim's point that it's like Polygon is shifting their focus. It's not maybe he did not mean to say it like that, but Polygon believes in diversification. It's for them. They'll do anything that can help them capture market share, and they'll do DeFi. They'll have permission solutions. They'll have non-permission solutions. They'll have optimistic rollups. They're also planning a ZK rollup, and they're also already working as a sidechain. So I think their engineering team is very fast moving, and even like who's sure that what technology is going to succeed. And I think their strategy is going with all of them and providing solutions to a number of people in a way with they are comfortable with. If they want DeFi, they'll have DeFi. If they want C DeFi, they can have C DeFi, like what Disney would probably have. So yeah, it's a good strategy that will keep them like alive for through I think at least next two bull runs or two bear market cycles.
Thanks, Navesh. Okay, moving on into the last few minutes here, we'll take just a brief peek at the market roundup. Obviously, we had some pretty grim macroeconomic news this week. The CPI numbers came out, and it turns out that we're at a 40-year high inflation rate. Again, it seems like a sort of Groundhog Day experience at this point. But yeah, not quite as devastating as it might otherwise have been. Nathan, what do you make of this week's news, and where do you see the next few days going for us?
Yeah, I think anybody who reads my newsletters will know that I think probably the most interesting thing that's happened in terms of Bitcoin this week is the PI cycle bottom indicator. It started to flash its first buy signal for the first time since late 2018. It caught the bottom cycle in the date that I mentioned in 2018 towards the very end, maybe within 3 days. So I think it's done that before as well. So on two occasions, and obviously the PI cycle top indicator has worked very well. So since that's happened and started flashing, Bitcoin started to move higher. So that's very interesting. In terms of the market action, so the market tested the top end of its short-term range last week at 22,500. It couldn't break above there, so it went back down earlier this week to test the bottom range at 19,000. It couldn't break below the bottom end of the range, and then obviously it's done what it's done. So the fact that that's just happened, and we've got the CPI report failed to generate a new low. It's obviously bad news, and the market is pricing in a 75 basis point hike, and we're back towards 21,000 nearly. I think that's very positive, and if we can continue to see Bitcoin move higher and actually break above the top end of its range at 2250, I'm very, very bullish about what could happen despite the CPI and everything like that. I think just basing it on the PI signal alone is probably quite dangerous because indicators haven't been working that well this year in a bear market, so you can't probably judge it just on that alone, but you have got to recognize the accuracy of the signal before, and also there's some interesting price patterns in the market, and the market is starting to react, like we spoke about earlier, to more to positive news in the crypto industry, which it probably would have ignored and sold off previously. So those are all positive things. So I think over the next few days and weeks, if we do see Bitcoin break above 22,500, I think we could see a move towards easily 24 to 26, and I think my ultimate target would be 27. If the PI cycle indicator is correct, then obviously it's going to go a lot higher than that, but that's what I'm expecting. And I guess just to play devil's advocate, if if the market did head lower for whatever reason, and it broke 19,000, and it totally, I would say, negated the signal that's just been issued, and that would be quite dangerous as well. Bear in mind what's been happening with the market this year. So yeah, overall, I'm quite bullish going into this week, but Bitcoin does need to get above 22,500, and if it can do that, then I think we'll see some very strong gains over the next few days and weeks.
All right, that's pretty good to hear. So that leads into a question I think we discussed last week or maybe the week before. Everyone on Twitter wants to talk about bottom signals. Is this the point where we turn around? I'll just open it up to the group. How are you guys feeling this week? Where do you think we are in the cycle? How do you guys read the charts? Mitchell, I know you don't look at the charts. What do you think? Mitchell might be away. Tom?
I need a second to gather my thoughts.
Oh, okay.
I don't look at the charts, funny enough, so the way that I do get updates on prices, I read Nathan's newsletters, because I think that he has a very solid, at least macroeconomic roundup and how that relates to the crypto market. So Nathan, you're doing an excellent job with that. I would say my bottom indicator, though, is not as quantitative. It is just looking at Twitter and seeing how much existential dread there is.
Mm-hmm.
And right now, things have still seem too optimistic for me.
I feel you. Like, you can't overestimate the value of that qualitative data. Ant, did you have a comment?
Yeah, I was kind of feels like we're going to move up a little bit. And then I don't know what will happen after that, but hopefully we'll head back down. Just feels like depending on all like the macro news and all the rest of it. I think, as Nathan was saying, the inflation situation kind of like didn't scare the market as much as expected and stuff like that. So I don't know. It feels like it could be like perhaps on the verge of a big macro change. We'll have to wait and see what happens there. But then also, like in the short term, at least, it feels like the market's about to move up, and we might see some good movement in the next couple of weeks or so.
Cool. Tim?
Yeah, from like a macro perspective, I've heard some people saying today that it feels like the market is, how to describe it? It's like people are calling the Fed's bluff. Like, there's been so much pain, and, people are now saying, like, we don't believe that you're going to continue driving the economy into the ground. It's gotten to the point where, like, you can only do that so much before, like, for example, the Japanese yen goes to like 150 against the dollar and the euro goes down to 90. And that's going to like create big problems because both those countries hold a lot of US debt, and they're not going to be able to pay it off if their currencies get devalued against the dollar. So I think it's gone to the point where the market is potentially saying, like, calling the Fed's bluff and saying, like, we don't think you're going to continue doing this. So that's potentially what's driving another reason or another factor that's driving the current bullish impulse that we might be on the verge of right now.
Interesting take. There is an interesting take. I have to think about that for a minute. Let's close it out with Tom. Tom, what are your feelings this week? Bring us on, buddy.
I don't know. I look at the charts and I'm like, this would normally traditionally maybe be a bottom, like if it was just up to crypto. I kind of feel like we're close to the bottom just in the ecosystem. That being said, I just had to like switch countries because there were like massive protests about the price of fuel. So I think I think it depends on how crazy the year goes, right? Like on one hand, you've got people saying we might have a 5-year bear market, and other people say we might be at the bottom. So I don't really know. Maybe it's out of crypto's hands at this point.
Cool. Thanks, Tom. And we're about to wrap up here, but just because it's not fair to ask the question and not answer it, I think we're still looking at a prolonged drawdown. I don't know how long. Maybe a year, maybe 2. It's hard to say. But I think we got a while to go. And I'm kind of with Mitchell that there's a lot more optimism left to be shattered before things really hit their bottom. Any last thoughts, you guys?
That's a brutal way to put it. There's still so much optimism left to be shattered. Yes.
Well, we bring some reality to the show. Anyway, thanks everybody for joining us. It's been a pleasure to have you all with us this week. I want to wish you all a wonderful weekend. I hope to see you all next week. Take care, everybody, and thanks for joining.